What if you had $1 million to invest in real estate today? The global stage offers two titans, two completely opposing philosophies for wealth creation. On one hand, the tax free, high yield allure of Dubai. On the other, the timeless, stable fortress of New York. This isn't just a choice between cities, it's a choice about your future as an investor. Welcome. Today, we dissect the ultimate real estate showdown to determine where you should park your capital in 2024. Let's begin in the Middle East with Dubai. Dubai's proposition to global investors is powerful and centered on three key pillars. First, and most significant, are the high rental yields. We are discussing gross yields typically between 5 to 8%, significantly outperforming most established Western markets. This translates to substantial cash on cash returns from day one. Second, we have the unparalleled, business friendly environment. Dubai operates with a zero tax regime on personal income, capital gains, and property ownership. What you earn, you keep. This is a fundamental advantage for wealth accumulation. Third is the potential for rapid capital appreciation. As a developing global hub, new projects and economic diversification can lead to significant value increases in a short period, offering the chance for aggressive portfolio growth. However, this high reward environment does not come without its caveats. The Dubai market is known for its volatility. It can be susceptible to boom and bust cycles, driven by speculation and off-plan supply. Furthermore, while improving, the market's transparency and regulatory framework are not as mature as those in centuries-old markets. Thorough due diligence is not just recommended. It is your first and most important line of defense. Now, let's cross the Atlantic to the concrete jungle, New York City. New York represents the blue chip, the safe haven asset. Its strengths are not in explosive growth, but in profound, time-tested resilience. The first pillar of New York is its unmatched stability. It is a flight to safety market. During times of global uncertainty, capital flows into assets like Manhattan real estate, providing a robust floor for your investment. Second is long-term, consistent appreciation. While not dramatic, the market has demonstrated a reliable upward trajectory over decades. You are investing in a legacy asset, not a speculative bet. Third is high liquidity and deep market transparency. The rules are clear, the data is abundant, and the process is institutionalized. Buying and selling, while complex, operates within a well-defined system. But this security and prestige command a premium. The entry cost is exceptionally high, with $1 million providing limited options. The operational costs are a constant burden. Property taxes, maintenance fees, and insurance can easily reach tens of thousands of dollars annually. Finally, you must navigate a complex regulatory environment, including rent stabilization laws, which can limit income potential and favor tenants. So let's apply this to a $1 million investment. The contrast is stark. In Dubai, $1 million can secure a premium two-bedroom apartment in a world-class location like downtown or the marina. With a conservative 6% net yield, your annual rental income could be $60,000, entirely tax-free. In New York, that same capital might acquire a one-bedroom apartment in a good neighborhood. Factoring in a 3% yield, your gross rental income would be $30,000. But after accounting for property taxes and high maintenance fees, your net return could be halved, landing around $15,000. The dichotomy is clear. Dubai offers higher potential cash flow and tax efficiency, while New York offers a safer but more expensive store of value. So, who wins? The verdict is not universal, it is personal. Your decision hinges entirely on your investor profile. Choose Dubai if your strategy is aggressive growth. If you prioritize high tax-free cash flow, you are comfortable with market cycles, and you are building a dynamic portfolio for substantial passive income. Choose New York if your primary objective is capital preservation. If you seek a stable, long-term defensive asset to anchor your wealth for decades, and you value security and prestige above explosive returns. The desert's high-stakes opportunity, or the granite solid assurance of New York. The path you choose will define your investment journey. The power of that decision is now in your hands.